Hi and welcome to another episode of Monday Market Outlook. It has been a very exciting first half of January for 2023 so far for the local and the global markets, right? So usually during January, we look at some what we call early indicators, no? So typically the first 5 days of January gives us a good sense of what the market would look like for the rest of the year, no? So if we look at the past 12 years for the S&P 500, if the first 5 days of the market is good, then the rest of the year follows, no? And if the market is down for the first 5 days, then the rest of the year is usually also typically down, right? So there's also such a thing called the January trifecta. So it's a combination of the existence of Santa Claus rally the first 5 days and the January barometer, no, that usually determines, no, how the markets would look like for the rest of the year. If we look at this chart here, so 42% of the time we got a January trifecta, right? And 88% of those times resulted into a positive market, an average of 17% increase. If we look at the past trifectas in the US market, no, we've seen here very attractive full year returns, no. So it's very exciting to see what the end of January looks like, and if we're going to have a January trifecta, and how much yield will we get, no, for this year if that happens. Now looking at the Philippine Stock Exchange, let's look at historically how we did, no. And it looks like it's the same case. Now those years that are highlighted in green, no, shows the existence of the January trifecta and the upside that was experienced during those years. Now there were years that this didn't happen, 2001 and 2002, as well as 2015, 2018, right? So the other years was not a January trifecta, but it did have two indicators, right? So those in blue had two good indicators, which also led to a positive year. So far we've had two good indicators. So the likelihood of a positive year is also very good, no? So let's look at the PSEI chart right now. Look at that rally, right? So we've broken through a very critical zone here at 6,800, no? So we'll delete this. We'll have to identify where the next support levels will be. We have to upgrade our support levels to around 6,650. Now where's the next resistance? If we look at the formation here, we see a resistance at this level, no? 1, 2, 3, 4, 4 times. So that's a significant resistance level here. So we're gunning for that, right? And we're not far from that level, right? So the next resistance, the next resistance would be probably at this level, gap fill level here, right? Which corresponds to 7,300. So we'll see how the market plays out. If we look at it on a longer term basis, remember that we are still on a downtrend line right here. But it's threatening to break out of that downtrend line. It met some resistance here, so it's now on its downtrend line, testing it, right? So the next few days in the stock market would be critical to see if we can break over that, no? But I'd like to see it break over that line, and it can possibly form a formation here and then retrace. So we're looking at a scenario where we can consolidate at these levels, no, in the coming weeks. Most of our stocks, BDO, BPI, has reached their target price. I would suggest top slicing of some of those and rotating your bank positions from BDO, BPI into Union Bank, given its inclusion in the index by February. Now note also that after last Friday's move, technically, right, the Philippine Stock Exchange has already entered into a bull market. Now, a bull market is technically defined as a rally of more than 20%. So we hit 22% last Friday, and we are currently up at around 24.4. Almost, we've actually hit 25% rally. So very exciting times for the Philippines Stock Exchange. So if we look at our chart here for the past 5 days, no, most of our stock picks doing quite well. SCC on a retrace, probably a good time to accumulate some Semirara shares, especially just for the dividends, no? Not expecting a lot of growth for Semirara, but it's actually still pretty undervalued and gives great dividends, no? Performance of our stocks year to date also doing quite well. Most of them overperforming the index, no? So leading the pack is Figaro Coffee and BDO, Bloomberry, and 8. Now, Bloomberry, interesting chart. It's meeting quite a resistance here at 9. Congratulations if you're able to sell at 9 or even 9.20. Let's see where it moves, no, in the next few days. SM breaking out of this wedge formation, right? So it's the same pattern here as AC. It was consolidating here, right? And then it broke out. Same with SM. So congrats if you're able to accumulate during those stage, no? There's a total of 281 stocks in the local stock market. 81% of those stocks are above their 50 EMA. So it's really looking good for the local stock market. You can choose any stock you want and it's going to be a winner, right? So 81% chance of winning, right? During this time, if you're late, don't jump in because the ship has sailed, no? It's really a time to take profits, no? Take profits on some of your stocks, right? And then wait for a good time to accumulate back. So let's move on to the global markets, no? We've ended last week on a very, very critical level. We've identified this level as potential gap fill, 3,995. And it has reached that level. The next few days will be very critical in determining which direction the S&P 500 will go. Since we've already filled this gap, we can delete this line here. We haven't filled the 3,750 and the 3,530 level here. But given that it's moving to the upside, we have to be open to the possibility that this might not move in the direction that we plotted for it, right? So if it moves to the upside, if it's able to break this critical level here, the next gap fill zone, the next resistance zone would be somewhere here, 4,120. So we'll draw a line there and see, no? And then the next gap fill area here would be at around 4,250, right? It would be very interesting to see how this moves in the next 4 days, given that we're going to start the tech earnings season soon, right? Netflix is going to report on Thursday, so let's see how the market goes. Now, it's a shortened trading week for the U.S. markets, given that Monday is a Martin Luther King Jr. Day, no? Aside from the S&P 500, let's look into the Nasdaq. This is also a critical level for the Nasdaq. This is a strong resistance here. Three lines converging. We have a downtrend line converging here. We have this support then became resistance line, and this is actually a 61 Fibonacci level here. If it breaks to the upside, we can potentially see the Nasdaq moving to 1,200 and a gap fill here. Look at that gap fill, 1,277, right? So interesting week for the Nasdaq as well. Dow Jones 30 was able to break out of its downtrend line already. It was able to successfully test that downtrend line and bounce back off of it. Now, the Dow Jones Industrials is composed of your grandfather stocks. Now, when we say we want to go defensive, this is what it means. The US 30 is composed of classic stocks like Apple, McDonald's, Pepsi, Coke, Merck, uh, Pfizer, Procter and Gamble, right? Again, like I said, grandfather stocks. So you needed those stocks to be defensive. So it is worth considering having some defensive stocks on your portfolio to shield you against an upcoming recession. Now, let's look at the VIX here. The VIX is a volatility index, no? It measures the fear or the greed of the market. Will we see the S&P 500 move to the upside? Because as this goes down, the market goes up, right? And as this peaks, the market, it usually indicates a market bottom and would be a good time to buy some stocks. So if we look at the S&P 500 here, right? The S&P 500, it has an inverse relationship. So as this goes down, and if it goes down further, we can expect the S&P 500 to move to the upside. Now, interesting chart here I want to highlight, Bed Bath and Beyond. Now, another short squeeze is happening with Bed Bath and Beyond. And if you look at the chart here, every time there's a short squeeze, it also corresponds to a peak in the markets. Now, as this short squeeze is happening, does this also signal a peak in the S&P 500 and might move to the downside? Because if we go to this chart here, plotting also GameStop and AMC, historically, look, it has also marked the peak of the S&P 500. Another way to look at this is to look at the smart money and dumb money confidence index. So if you look at this chart here, so smart money is institutional money and dumb money is non-institutional money or retail investors, no? Which is not to say that retail investors are dumb, but it's just a term that they use for that. So maybe we'll use non-institutional index, no? So anytime smart money and non-institutional money goes apart, right? The market bottoms, right? Look at this pattern here. As dumb money goes up, meeting smart money, it usually signals the peak of the market. We're seeing the same pattern here where dumb money and smart money is converging. So is this signaling the peak for the S&P 500? Again, this is a very critical time for the S&P 500. We'll see how the markets will react to earnings reports next week. So let's look at current money flows, no, that is happening in the S&P 500. If we look at the US market sectors here, we can see a rotation. Now look, this is energy, utilities, consumer staples, and healthcare. Those are your classic defensive stocks. IBB is biotech, no? There's a rotation, right? From the defensives to clean energy, mining, solar, semiconductors, communications, real estate, even finance, right? Uh, so, and if we look at the past 5 days, it's the same case, right? So, is there a rotation happening already into less defensive sectors? But again, the US is not in a recession yet. If you are looking to position your portfolio for 2023, there's still room for some defensive stocks in there, but don't discount that some of the beaten down stocks last year may stage a rebound for this year. Going into a recessionary environment, stock picking for the US stock market will rely mostly on valuations, right? So you want to pick stocks that are fairly or undervalued for them to perform well in this type of scenario, right? So let's look at the S&P 500 PE ratio in the past 25 years, right? So the average is 26. We are currently at around 19.89. We are not expensive, but we're not cheap either. So there's still room for the PE ratio to go down and go in, right? But currently, these are the stocks that are quite attractive and undervalued that you can consider, right? So you have your semiconductor and your solar stocks here. Canadian Solar, On Semiconductors, Taiwan Semiconductors, and Supermicro. They are great semiconductor and solar plays. Energy stocks, again, we still need some defensive positions in our portfolio. So, and among the energy stocks, Valero Energy, NatWest Gas, and Oxy are still good picks, no? Especially that these stocks also give great dividends, no? Among the FANG stocks, Google is best positioned to stage a rebound this year. Look at this double bottom here. So there's a lot of potential to the upside, right? Again, more defensive stocks, the Dow Jones Industrial Stocks, Pepsi, Coke, Johnson and Johnson, and McDonald's, right? And then, of course, China reopening, you have your Alibaba and your Wynn Resorts. You have your biotech, Vir, biotechnology, as well as Merck, another Dow Jones stock. And if you like REITs, you can also consider global REITs. No, we have Realty Income REITs, right? It's a great concept. No, Realty Income gives monthly dividends. So if you need that monthly cash coming in, Realty is a good bet, especially that it gives around 4.5%, no, the dividend yield there. And also Vici Properties, they're a casino REIT. So that's it for this week's episode. I hope you found the information useful, no? So don't forget to like and then subscribe to the channel. This is a great time to be in the markets, no? The markets are on a rally. The Philippines has officially entered a bull market. So it's interesting to see how all of this plays out in the next weeks, no? So hope to see you every week as we track the progress of the stock markets. Good luck on all your trades. Please manage your risk properly. I hope to see you again next week. Thank you and bye bye.